Welcome back to the rest. We got about a dozen people or so over there on the YouTube page, and hey, we got my favorite people. We got Meg, we got Cotter, we got Jeremy. Jeremy, actually, is that my crude oil trading Jeremy? Is that the same one? God, I think we learned a lesson in crude about moving stops to scratch, eh? Ouch. Anyway. Having lots of fun. Actually, a very active day trader room this morning. Had a fun little crude short working for the better part of the morning. Actually got out a little bit early. I was a little bit surprised, but nonetheless took 100 ticks from the market, so couldn't complain. But nonetheless, crazy day in the markets, and if anything, had some econs that were a little bit eye-opening. So as a result, I don't think we can even remotely consider that the Fed is anywhere near done raising short-term interest rates. But you never know. I mean, I suppose stranger things can happen. But had a big number come out of the U.S. housing market. And so as a result, I think on top of the fact that earnings are probably a little sketchy right now, especially in technology land, advertisers and stuff are not willing to pay up for their airtime as they usually are during like really hot economic times. So earnings a little bit shaky, and then on top of that, like I said, we had a pretty big number come out of the housing market. We had new home sales month over month up 9.6%. Now, wait a minute. If you're supposed to be trying to cool the economy down, that's not going the right direction. Man, my hunch is we're not done with Fed raising interest rates for quite a bit here. And actually, what might be interesting just for fun, since we're here for kicks and laughs and all that, is to check in on how the euro dollar market is acting. And you can see euro dollar market here shows no signs of bottoms yet. That data doesn't really seem to have affected too much. The trend, of course, still pointing down there, so which means interest rates still pointing up. So pretty wild day in the market. Of course, Brent-wise, I think we're getting our seasonally cautionary message from the market. I think that makes perfect sense. We do actually have TRI CTO on the call here today, Tuesday, 25th of April. He will be joining us for the after party. If I understand correctly, he had a little bit of a kitchen fire that he had to deal with. Sure hope everything's okay. Maybe Chris, you could just PM him and let me know whether he's actually, because hey, maybe they're calling the fire department. Who knows?
Hopefully not. I'll reach
we
out.
might have Stuart on the call. We might not. I'm not quite sure. Anyway, so Chris, if you could maybe just touch base with Stuart. Just keep us abreast as to whether he can join us today. But usually on Tuesdays, we have a report from our CTO. And he's been doing a bunch of updates and stuff to the breadth indicator. You notice that he's added quite a bit more data, which I think is a good thing. But you notice that he doesn't have the data from the histogram here over here just yet. So, it's always good to just check in with Stuart, see how site development is going and all that kind of stuff. So we'll look forward to that, and as well too. He has a list of what he considers good fundamental names within the crypto space that I think it's now getting to the point where if you do want to actually make some serious money in this upcoming bull cycle, whether it be the end of the money tightening cycle and we go back to easy money cycle, which, is a very typical 4-year cycle, or whether you want to label it things like the crypto cycle, same sort of idea. And actually now we have the blog on here, so I can show you this relatively easily. Josh is fantastic work. Keep in mind, anybody who's watching this on YouTube on the free channel and stuff, this blog is for free. And frankly speaking, I don't see any better research on the markets anywhere than what Josh has done here. This is exactly spot on. It's beautiful work. I've been sort of humming and hawing that I think this year is going to kind of look like this, back and forth, back and forth, back and forth. But the point here is that, if you do believe this is the image I was looking for, if you do believe that this is the bottom of the cycle, and it is almost impossible for me to stop people to come in and buy when the markets are up top like this. And ironically enough, now it's almost impossible to get people to buy now that we're at the bottom of the range. And of course, we're just giving this stuff away. We've had a little bit of a rally here. I'm a little concerned for Bitcoin that maybe we've kind of erased the negativity and everybody thinks, okay, it's time to get in, go long, and maybe we got a little bit of a punch in the nose that might be facing us here through the course of the rest of I would say, we're into spring. So like spring, summer, probably late spring, we have a dump. Summer, we have a half decent seasonal rally. And then this September, October, that's when I'm looking for sort of serious downside fireworks. So point here is that once this window is gone, hell, you can see what Bitcoin does. Once the bottoming window is gone, whoop, up she goes, and she doesn't look back, right? It just becomes this relentless grind higher once we get through halvening events. So if you are serious about doing this, you got to get serious about this now. Whether it be, I'm going to do the little old lady, just buy a little bit of everything because I don't know what's a good idea. And I'm just going to make sure to sell halves on doubles, get my original capital back in my hands and just build a portfolio of names. And then when we go through the blow off top part of the market and you hear like, when was the last time we aired, and of course, YouTube loves when I do this. Mr. fucking code fucking. You don't hear those guys, but at the top of the market, I guarantee you will. So, do you want to be positioned that when those guys are going off and they got like Twitter streams of 10,000 people sitting on their streams and just hanging on every word? What should I buy? What should I buy? I want to get rich. I want to get rich. Sadly, of course, that's when you actually want to be exiting the market, not entering. So do you want to be taking profits into those events? Because I'll tell you, this market is stunningly cliche the way that it acts. So anyway. Okay, so point of the matter here is, do you have your shit together, right? If you do, awesome. I've actually been buying, I think I bought about 20, 25 different altcoins over the past 6 months, and I will just be slowly adding. I think I've banged out about 4 or 5 doubles already, so feeling pretty good about that. Just slow and steady wins a race, right? And we have actually a nice little algo that's operating on the site right now that has me. The algo actually is sitting on the sidelines. Sold everything there back on April 17th. But, I'm pretty happy with the algo spitting out a 65% return. So, I don't know what the hell Bitcoin's going to do here right now, but I'll tell you, it's come off a bit here over the past week or two. And also too, this sort of reiterates that sort of general message: sell in May and walk away. The whole broader market, the histogram's been bid up here. If you're thinking about putting new money into the market, you're probably coming a little bit late to the party. Econs, news, that kind of stuff. It's kind of sad to see, and I see this happening over and over and over. A lot of the icons of my youth are all just slowly slipping away. It's like every single day a name from my childhood is passing away. So Harry Belafonte, pretty famous singer, actor, activist, he passed. And it's just like every single day. If it's not one verse, it's another, it's another. And I suppose as the baby boomers, they're all getting up there in age, they're just going to slowly slip away from us, which is a little bit sad. News, I don't know. I think probably the biggest thing that I'm seeing out of the news these days, I suppose, CNN. And it's funny, and I don't even know if this news feed is even relevant anymore. I really should sort of touch base with Sjord and see if we can clean this news page up a little bit. I've noticed that these guys, they're just stuck on this Dominion voting thing. They absolutely love this because, of course, Fox News got basically the polar opposite end of the news spectrum. They got pretty much humiliated there in the public eye with that whole Dominion voting. I don't even know if this news feed's even relevant. Interesting how Mr. Biden said that, yes, I'm not dead. I might look dead, but I'm going to run for president again, whether you like it or not. So there you go about that. Anyway, I suppose we're heading into preparation time. In fact, I think it'll be, actually, I'm surprised. I guess maybe it's early next year, but no, I thought actually they already started the primaries and stuff like that for the Republicans. I think that Mr. Trump, of course, is going to be back up on the force, so it's in essence just a rematch of the last election. And of course, there's lots of people that think that that last election was totally rigged. So I'm sure we're going to have plenty of that kind of conversation going forward. Interesting to see that Tucker Carlson guy, who was, I think, a fairly substantial person in the sort of news media game down in the States, was actually let go by people at Fox. And I'm quite often what I've seen happen in this modern day society is you're going to have like big cases, especially dropped by regulators, SEC, whatever, Justice Department, all that kind of stuff. But probably the bigger damage is in the civil cases. So I have a feeling that Fox got run through the ringer over this Dominion, and they had to pay a huge penalty and all that. But that's actually not the big thing. I think what will happen now, because they were, I don't know whether they were actually found guilty or whether it was just a settlement, but I wouldn't be surprised if the civil suits now start. And I think that's the number one reason why Fox had to get rid of Mr. Carlson and a few others that were sort of touting the Dominion election fraud thing, because quite literally it wasn't a fraud. And now you can have a whole bunch of civil suits all start to pop up. So Fox actually has to start looking like, well, we understood that these particular people were espousing this message, and we now officially disavow, association with those people, and we have turned the page and we are a new leaf. If you're angry at them, sue them individually, that kind of thing. We've already settled. So I have a funny feeling that's how this is going to play out. But anyway, I suppose also news, we are into earnings season in earnest. And as I had sort of said there, the tech stocks, especially with the, if the economy is slowing, I think the broader economy is giving lots of warning signs that it is slowing. The only problem is, and we've talked about this before, there's now like 3 different parts of the economy. There is the commodity and price pressure, and it used to go cost push, demand pull. But I don't think I have that phrase right. Anyway, point here is commodity prices would go up, and then the workers would say, hey, we can't afford to live anymore. We need our wages. And, historically, the Fed would come out, they'd raise interest rates, make the economy and the consumer feel just horrible, up to their eyeballs in debt. And then, of course, interest rates go up, then that's a double whammy. And so, companies would cut back and fire staff, and we'd go into recession and people would be on unemployment lines and bankruptcies would start to pop up, and that would be a self-correcting mechanism of the inflation of commodity prices. And interestingly enough, I think the mechanics of the Fed raising rates to 5% has actually done that job. It's actually worked quite well. The only problem is we have these houses and the housing industry, which last century, they actually kicked all the banks and all the Wall Street goons out of the housing industry in the 1930s because of the absolute disaster that including housing as a security in your society, what that caused in the whole advent of Hoovervilles and homelessness and stuff like that. Well, through the 1990s and early 2000s, through the Bill Clinton blowjob days and through the George Bush Jr. made up phony baloney war days. We mysteriously lost $1.2 trillion. Sure you did. It's in your back pocket, sir. Excuse me. You don't want to acknowledge my, you know how this story goes, right? Blah, 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 blah. So, banks, they work their way. And I actually was working in the industry and I watched it happen. When I first started working in the business, banks were not allowed to be in the brokerage business. They weren't allowed to be. In fact, the first firm that I worked for, Richardson Greenshields, it was called a private firm and actually got its start as a commodities traders in Winnipeg, Canada, if you know where that is, Winterpeg. So now we've got houses thrown in the mix. And like I said, the one thing that's absolutely killing us here is the fact that the BlackRocks of the world are coming in and buying up all the housing stock. And it doesn't matter what the Fed does. The Fed could raise interest rates to 20%. That Fink guy, I mean, geez, you just say his name and you know what kind of character he is. He doesn't care about you or I. He just doesn't care. And he doesn't care if you have a roof over your head. He owns the houses. And just like Klaus says, you will own nothing because us 1% will own all of the housing stock. You will pay us slave wages to live in the houses. And of course, at interest, the bankers are happy. They'll make tons of money on all the money that's borrowed to finance all this. So, this number right here in, generations gone by, that wouldn't happen. But in this, and actually I did hear a reference but if you watch all these social media posts and stuff, I'm sure you've seen the video too. And he said that, I'm just paraphrasing a name I can't even remember. But I remember one person in particular said that what's ending up happening now is the most preferred asset for international pension funds. So these are like the Chinese pension funds, if there is even such a thing. I suppose that's a bit of an oxymoron. But Japanese, Taiwanese, Thailandese, Julian over there, a lot of the European pensions, I suppose even, probably even Asian and Mideast, their most preferred investment vehicle choice right now is U.S. single family homes. That is the most desirable asset to own. So what a surprise, new home sales up 10%. When really the market's saying, okay, we're going to cool down, the economy's going to calm down, Fed's raising rates, where everything's going, cost push, demand pull, the classic, and oops, nope, sorry, correct that. So I'm not, the irony of it all is this is now going to become a game of chicken where the Fink is just going to keep buying up the houses. Fed's going to keep raising interest rates. Fink's going to keep buying more houses. Fed's going to keep raising interest rates. Somebody's going to break here. Something has to break. And the problem is it just hasn't happened just yet. All right, there's a big mouthful. Sure hope you all got entertainment out of all that nonsense. So that's sort of your economic backdrop. I think there is plenty of case for the Fed to continue raising rates. And of course, as we talked about, the market itself, and actually, interestingly enough, the Fed spread, the spread between that market rate and the guaranteed rate by the cartel, it's starting to tick up here. So this thing will go absolutely nuts. And you don't want it to go nuts. A reading above 100, that's this dotted line here, implies crisis. And we were definitely in crisis territory there a year or so ago. I think the Fed got control of the system and everybody sort of calmed down. All right, looks like the Fed's in front of the curve here. And there is some confidence in the system. But you can see it's starting to tick up. And if the Fed just goes, you know what, we're not going to bother raising rates here, and the euro dollar market is still pointing down, you might find that this spread takes off again. And if that's the case, then we're right back into, Mr. Druckenmiller going, why the hell are you screwing up our damn economy again? Anyway, we'll see how that goes. We'll cross that bridge when it comes to it. It's clearly obvious that the economy, sort of the real economy, Main Street, and then this hedge fund, pension fund, think fund, whatever the hell you want to call it, it's heading in a different direction. And I think this is what they call like the K-shaped economy. So quite literally, you've got the 1%, they are heading that direction, and then there's all the rest of us, and we're heading that direction. And there is your K-shaped economy. Boo, hiss, hiss, boo. Anyway, it is what it is. Welcome to the 21st century. I've said a lot, and I've schooled people this, that I wouldn't be surprised if we're heading back towards, Dickinson kind of economics. You all know of Scrooge, right? And A Christmas Carol and all that. That's what this economy is turning into. So, well, get used to it. Go and make a whole bunch of money and you can join the 1% and laugh at all the peasants. It's interesting to see that the, as we had sort of alluded to earlier, earnings picture, kind of weak. And of course, we did have those bank earnings as part of the equation. Should be interesting just to zoom in. Here are the financials. They look like they're getting hit too hard here. The irony of it all is I'd actually make the argument. Oh, I thought we could zoom in on that. I think you can make the argument that things like Visa and MasterCard, they're laughing. Hey, interesting, American Express is down a little bit. And of course, you got the big money center banks. These are the guys that would like to basically put all the regional banks out of business. So in essence, it's just, this is more moving towards this world where, like a country like Canada, they actually got rid of all the regional banks. Geez, probably about 70 or 80 years ago. So the Rothschilds run the Canadian banking system, no ifs, ands, or buts. There are a few credit unions and stuff around province to province. And if you really don't want to deal with one of the big banks, you can always deal with a credit union. They have become actually a bit more popular, but they don't carry nearly the weight that the big sort of 6 banks in Canada do. And I think that's what they'd actually like to see happen down in the States, the Rothschilds, is that just these big money center banks, there's Joey. I'm actually surprised they don't have gold. There's Goldman Sachs over there. Because Goldman Sachs actually, they got like through the financial asset crisis and stuff, too big to fail and all that kind of stuff. They even got a banking license. So I think they kind of like weaseled their way into this group over here to a certain degree. But anyway, that's another. So earnings obviously going to be dominating the conversation here going forward, but also too, we are heading into that FOMC event, which is basically 1 week from today. So you probably see that, the actual Fed speakers and stuff go very quiet. We don't really hear a lot from them, but I can tell you one thing, I'm sure they did not like to see that number there this morning. And when I saw that number there this morning, I was like, oh my goodness, there's no way they can't raise interest rates in that environment. This housing market's out of control again. That's ridiculous. You're not supposed to have 10% month over month gains. Now, the one thing I will say about this that's sort of okay which isn't really, but um, seasonally, this is the time of year when people actually start going out and start thinking about buying a house, right? People usually buy houses in spring and summer. They don't do a lot of house buying in like the fall and the winter. So there is probably seasonal adjustment to that data set as well, because that is a month over month figure. So quite literally from like March to April, February to March, we're just going straight up here. But again, there's no way the Fed can ignore that. All right, so there's sort of your backdrop. Party on, Wayne. Party on, Garth. It was interesting to see that on that news announcement, we have been talking about the US dollar catching a bid here lately. I do like the idea. And every Tuesday we go through this. Tuesday we have our Stock Pickers Club meeting, Tuesday evening. So we'll probably do that again. And the question is, does David see my Adam and Eve, but I think this is now an Adam and Steve setup. You can see Steve's got a bit of a package here. So I suppose the Adam and Eve would just simply say, look at this is your Eve J-Lo booty bottom right there. Clearly on that data release this morning, the market was like, woohoo! I mean, who could tell me what is the name of this candle pattern here? Now, I'll give you a hint, right? And this is you're watching at home, so you're trying to learn. We can't call it a key reversal unless we actually close above this level here today. But is this a relevant candle pattern? The answer is yes. Very good, Prince. Very good. Look. So candlestick aficionados, that is an incredibly important candle that just fired there. I mean, we'll see how the day ends, but, Brian and his crazy W's. Hopefully you can all see that, if this W comes in here, this is actually stunningly textbook. And I think that data, right, we could have very easily melted down, made new lows, gone through this low, and the bear's fully in charge, and lower highs and lower lows defines a bear market, blah, blah, blah. But wow, big ass bullish engulfing bar there today on that data. Because I think that the market said there's no way that the Fed can't raise interest rates in the face of that. And the US dollar just took off like a rocket. No, Cat, that's incorrect. So you can see it was right across the board. So US dollar index just flying higher here on that data. Euro getting completely punched out. And of course, the euro, it's about 35% of this US dollar index. So that makes sense. Swiss franc getting punched out, which in essence should be bearish of gold. This should be a very deflationary event. If the Fed has to go and raise interest rates, well, we'll see what happens. Canadian dollar got completely punched out. The crude oil market got completely punched out on that. And you can see Aussie dollar. So the commodity currencies all got completely slammed on that news release. Interestingly enough, the one market that didn't really get negatively hurt too much was the yen, which is interesting. Not quite sure how to interpret that. I suppose you could make the argument falling crude oil prices should help the yen, but maybe we'll go into that in the after party. Interesting too how Bitcoin and crypto just flatlining here. Because you remember, and actually this is, it's 9:30, so we should probably wind up on this. I won't go into too much detail. I had a really cool crude oil short here earlier today. And then, interestingly enough, Jeremy had pointed out, and you heard me make reference to him at the beginning of the session. I did try and take a little opening range trade here. And it was funny because I even woke up, I was up early with Chris, and he's like, nope, no opening range trade. And I think I even wrote on here, we went through the whole sort of criteria step by step, which is what you kind of have to do in this game if you really want to be a professional at this. So there was no trade here, but for shits and giggles, I threw on some paper trade just to see how it went. Then, and it really didn't amount to anything. So this was actually correct. But then I had just the most prettiest little fail right up against these highs, and I rode this short from there all the way down to there. Took 100 ticks from the market, so I was pretty happy about that. But what was really interesting about this is we slammed into a 2.618, and we also actually tripped up a really cool 4-hour level. And that was off of this chart right against these lows. And we had a fog and bomb level there, ATR. And so that meant that this actually was a valid level. I was a little concerned about the gap. I don't really like this. This looks sloppy, but nonetheless, slammed into these horizontal support and resistance, into the ATR, into foggy boggies. And that meant that you could start hunting setups off the 3-minute chart. Look at that, Jeremy. We even chatted about this. We have a rule that if 50% of the anticipated move comes, then you should really just move your stop to scratch. And we were debating whether you should move stops to scratch. We moved stop to scratch. Jeremy got stopped out at scratch. And we were like, well, let's see what happens, whether we should have just taken the full risk. And sure enough, boom, 2 to 1s. So there you go, Jeremy. You better journal that. That's really good information. As you can see here, I was ready, willing, and able to pull the trigger, but I wanted to see a dip down into my reload zone, and I just didn't get it. The bastards, they just wouldn't give it to me. So I couldn't do anything there. But anyway, so let's wind this conversation up. Maybe in the after party, we can talk a little bit more about day trading. Just a quick boo at the corn. We've talked lots about this, and actually, I'm seeing this also in the stock market. So if I go ES1 exclamation mark, and we put on the daily chart, you notice this is an interesting pattern, right? You can hopefully see this, where we went up, back to here, then up to a new high, then, oh, gee whiz, back to here. Do we do another up and then dump, head and shoulders top? Sure looks like it. And if we pop on over to Bitcoin, it's interesting. Oh, hello, there's the same pattern. So I actually think that the stock market and the Bitcoin market are actually basically marching to the same drummer. I also think, too, unequivocally, that Bitcoin has now been, quote unquote, securitized. I also, too, think that cost of production for like the really low cost producers is still down in this area. I don't hear any talk about 51% attacks. I hear lots and lots of chatter from, relatively young people who now fancy themselves as traders, and they're loaded up on the shalt coins. We'll touch base. I don't know whether Stuart can make it to the call. Oh, looks like he's here. That's good to see. Stuart is rah bullish of the alts, and then frankly speaking, I think there's going to be some absolutely fantastic wins over the next couple of years. The only question I have is, can I come in and buy something like that way up there? And for a guy like me, the answer is just simply no. I'm not allowed to. I'm a little worried that a lot of people are starting to get sucked into, don't worry about technical analysis, just go and buy and you'll make a fortune. And that usually ends very badly. I don't know how the hell this is going to play out. We do have FUMC coming up here in about a week's time. I actually don't mind the idea of the market actually doing a bit of backfilling here as we get ready for that FUMC event. And that actually looks something along the lines of these massive fractal patterns. And I get the impression that we're going through a fractal right now as we speak. And I thought it was interesting this morning that you notice that these lows were definitely taken out. Also, too, we had this 2.618, and I still don't even know if that's even been traded to yet. Can the market bottom here? I mean, it's trying to W out. And I was just basically saying that you can see the diamond. It didn't look like this, but you can clearly see, right? If you just visualize it, there's the diamond. Right? It's pretty straightforward. So it is interesting that, oh, look at what we got going on there. So I'm torn right now with Bitcoin. And what you notice here is the volatility. I mean, it was super ridiculous there right out of the gate Monday morning, but now you can see the volatility's come right out of price. So, you saw how they're taking the crude oil market back up. So could they very easily go through this 27.5 number and rally back up into the top end of the range here, setting up for that FOMC event, which is basically a week from now, right? Which would be over here. Maybe we rally, then boom, 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 boom through FOMC, and then we roll over and start to fractal out on this side. I still think so. Call me crazy. So the issue though is that, and I think it's super important, that I don't think we want to get too wrapped up in the bull case. There's probably a half decent trade here. Don't get me wrong. There's 38.2s. We should expect that to be tested. If I wanted to be short Bitcoin, this is actually my reload short zone way up here. So, and I love overlapping reload zones. That always gets me excited. So it's not really like I want to go short here. I could understand some people wanting to come in on the long side, and I think it's actually fairly straightforward for you. You can quite literally see 27,500 also is a big psychological level. It also happened to be a BFF off a higher time frame level. You've heard me talk lots about how markets love to bottom off of these BFFs. So, you use the information at your discretion. If I was going to buy this, I'd risk against the W bottom and just live with the results. Do you think you can get a 2-to-1 out of that? It's not a terrible idea, but it's definitely, we're down on the 30-minute chart. So this is definitely like a trader's trade, right? So all we're really asking is, if this double bottom does come in, can we go up and test these highs? Frankly speaking, if we do, and this is legit, we're probably heading up to this trend line and that 38.2. It's not a 3-to-1 risk reward. It's kind of like my buddy there trading crude oil this morning. That is it sometimes in your best interest just to strap on the long, which actually that would be just off of here. And there's the double bottom. There's 2.618. And do you just live with the results and just see what happens? So could you see something like that happen in the Bitcoin market here going forward? It wouldn't shock me. So caveat emptor, buyer beware, don't take no wooden nickels. Try not to chase. I don't know whether I really like this as an investment window. I actually think that we're still a little bit nosebleedy here. But, traders got to trade, and we've got about a week or so into that FOMC meeting. And what I've personally found from my personal experience is that they like to rally this market into FOMCs. I think I showed you this yesterday. We'll just finish off the video with this. Was it this one? Yeah, no, maybe it's too zoomed out. Maybe something off of here. Rally FOMC. Rally FOMC. Rally FOMC. Rally FOMC. So why would this be any different? Rally into FOMC? Sure, why not? So I don't like the idea of shorting here. I don't think it's investment grade, but I can understand if the lower time frame traders are like, hey, I want to take a shot into this event here over the next week. I think we're carving out some sort of head and shoulders pattern, which means we probably should rally up. That peak right there would be a good reference. That's 29,380. That's probably not a bad area if we do get that bounce as a price objective. Okay, I think I'm going to leave the free video at that. PMA for the win. That was about 30-35 minutes. Hopefully it wasn't too long-winded. Stuart, you ready to do this thing? See if he's there.
Yes.
Yes. All right. He gave me the big yes. I guess his house didn't burn down. Phew. All right. Have yourselves a great day, everybody out there in public YouTube land. Maybe come on over and listen to the Stuart. I tell you, if there was anybody that knows fundamentals when it comes to crypto, it's the Sjordmeister. And he's worth listening to just to get his take on the state of crypto. So we do a 30-day trial. Get your butt on over, listen to what Stuart has to say. Might even have an idea or two for you to chew on and maybe consider participating down the road. All right, that's all for this episode. PMA for the win, like Luke says. Slow and steady wins the race. Try and remember what your number one job is. And of course, we have a new school term coming up. If you don't know what your number one job is, and you don't know how to run a small business of trading, maybe consider making a small investment in yourself and get schooled up on how to run a small business of trading with the anticipation of actually turning a profit. All right, have yourselves a great day. All the best. Bye.